I can start?
Yeah.
Okay, thank you very much. My entire focus on this presentation would be on the small and mid-sized entities where we want to cover it. I'm not taking any examples of larger entities. Most of my examples are from day-to-day life. So it should be more relevant. That is the whole objective. I'm trying to focus it on this subject. Having said this, my subject is drafting audit reports for small and medium-sized entities, and I'm going to try to cover as much as possible only challenges in Caro. I'm not covering all the subjects of all the areas of Caro. With this, I'll just start my presentation. My contents are present scenario of small and medium-sized practicing units where we all fall. Understanding of audit report with reference to key audit matters and emphasis on matters and opinions, and how to classify audit as qualified, adverse, and disclaimer, because we have been using these words interchangeably on regular basis. So, but when it comes to handling drafting actual report, it expects us to qualify, differentiate report between qualified, adverse, and disclaimer. And when we do this, how does the materiality influence us, and what does this exactly materiality stands for? We need to see that. Management representation letter, to what extent it can protect us, because most of the time we use management representation letters to cover ourselves or to protect our interest. But to what extent it can protect, and beyond certain point it may not protect us, we want to discuss that. Various components of audit report, how the audit report is structured now, and after that last section is Caro, changes and its related challenges. When I say Caro and its related challenges, I'm assuming that everybody's read Caro, and only changes I'm going to discuss, and the challenges because of changes I'm going to discuss. But when I'm covering first few points about drafting a normal audit report, for time being, I'm assuming nobody's read 7000 is auditing standard 700, 705, 706. I'm intentionally starting with a little deeper understanding, so that there are certain basic misconceptions. If we have any, we try to address those out, and we come out of certain major issues which we are likely to have. Having said this, all present small entities, we have been facing certain challenges. If you read media every day, there's always been some news about auditors, about the role what auditors play, and day by day expectations from the auditors have changed drastically. Some people expect us to even detect on frauds also, and some people expect us to talk about the future of company, how is the company going to perform in future, and some certain people are expecting us to comment on past. So looking at this, there have been various expectations which are coming from the auditors, and if you see in 2018 and 19, in 2018 first half of the year, almost every day there was one major audit resignation in India. That trend continued in 2019. After, when government realized there have been resignations from the audits, that means there is something wrong with it, and government.
What's the page?
No, what's on this? Javan, please mute yourself.
So what happened is, I request everyone to mute it, because it's a long subject. I want to cover it as much as possible and do justice to everyone. We saw resignation almost on daily basis. Each of these resignation prompted us there's something wrong with the audit, because when some firm cannot handle it, there is some challenges, and those same audits are handled by somebody else and they're able to do it. So there's some challenges which CA Institute realizes, and not only CA Institute, NAFRA and the regulatory bodies, they realized it, and there have been changes, and we're going to see some of those changes are going to come to us. Whenever we have problems in the audit, we have always said our problems are with the bigger firms. It is not with the smaller firms where we all practice, including me, the small and medium size. We do not have problems. This is a misconception, I feel, because even when in 2010-11 Satyam happened, we thought कि बड़ा company का problem है, हमारा कोई issue नहीं है. The entire 2013 Companies Act got revamped, and if you read the Satyam's audit report, you'll see a lot of those points which were highlighted in Satyam audit report are brought in 2013, and we all smaller practitioners are impacted with this. So we all follow this on a day-to-day basis. So that's a major impact which is coming to us. The CA Institute also made changes in its disciplinary committee. There's an independent government nominee on the CA disciplinary committee. So it is trying to become more stringent with going forward with the norms. There is an ISBA. CA Institute is a member of international body, international ethical body, which defines rules and regulations for the member countries and member institutes, which CA Institute has to follow. lot of changes which are coming in our audit report, which we are going to follow for smaller firms, and smaller audits are also part of it. A financial reporting review board is set up by CE Institute. Sooner or later, this board is going to start review of audits. It is not only going to focus on the larger audits, it's going to focus on the smaller audit as well. It is not restricted to the peer review. It is going to even focusing on the small non-peer review firms to see how audits are conducted. We already have a boss, which is NAFRA, National Financial Reporting Authority, which has already been set up by Government of India in 2013, and it's inactive. NAFRA did a couple of 2-3 reviews of audits. NAFRA's one of the responsibilities to see how professional standards are maintained by professionals. Is there a need of drafting auditing standards and accounting principles? This is looked after by NAFRA, and NAFRA did made recently some reviews of some large audit firms, and the report is published and it's available in the media. If you read those reports, you can see if these big firms cannot satisfy the requirement of NAFRA, it's going to be a bigger challenge for smaller firms. And COVID impact is going to be largely for the small firms as well, because post-COVID, we are expecting that there's some amount of vibration in terms of entities. There might be some entities which are not able to pay back the loans to the banks or financial institutions, and these financial institutions might want to protect themselves. They might say that we have given loans based on the financial statements. So if whether financial statements are correct or not, there is a possibility of these reviews can start, and there might be some references to CA Institute to look into the audit reports which are submitted by members. So it's very important for us to, at this point of time, to address this issue, because we know there's going to be a wave of problem which is going to come in SME sector as well as where we all practice. ये problem है, ये आने वाला है. It's only a question of COVID, post-COVID. A lot of companies may not pull it out because of the financial inability to come out of it. And that's a problem. That's a time when we're going to have all the problems with this. SMEs, when we do audit, we always do audit with reference to income tax and GST. When we do income tax audit, we make our audit report 3CD, 3CA, 3CB, and then we say we do it. It's done. When we do GST 9 and 9C, we have it. And when we do these audit reports, it's our responsibility is done. Let me make it clear to all my friends who are listening to this seminar today. When we do audit general purpose financial statement audits, which is a normal audit. Based on that, we perform income tax audit. Income tax audit is done with reference to the clauses and the expectations provided by income tax, which are given in form of 3CD, 3CA, 3CB. We affiliate those and we do it. And GST is also, they have defined what is needed. But what CA Institute says, if you have done audit, you're supposed to have an audit report first. Now we're going to talk about those audit reports, which most of the firms have not issued audit reports for smaller entities. For example, proprietorship, a partnership, there can be a small entity, joint ventures, or an association of person. Most of the time, we complete our audit with reference to 3CD and maybe GST or any other, or trust. We do it audit with reference to trust, and we finish it. Societies, we do have formats of societies. Under Societies Act, we do audit and we submit that report and we finish it. But that's not an end. Those audit reports are specifically asked by those statutes. But you have performed audit under of a general purpose financial statement first, and then you have performed these audits. So you are expected to have an audit report of as prescribed under auditing standard 700 by Institute. We are supposed to see that and take it forward. It's very important for us. If you do not have that, it's a breach of ethical standard. If tomorrow somebody raises a query about our issue of about our audit report, and if we have to address this and you find there is some creditors which has not been confirmed and which we generally have not written it in 3CA, 3CB because it's not part of it sometimes, then we are expected to write these kind of issues in A700. It's a normal audit report. And again, let me tell you, we cannot create these audit reports if they are left out, because audit reports have to have a separate UDIN number. 3CD, 3CA, 3CB, UDIN cannot be used for this, because this SA700 audit report or SA705, 706 requires a separate UDIN because it's a separate report itself. So it's a request to everyone, please make sure that when you create audit report for 3CD, make sure that your audit report under SA700 is created first. You finish your normal audit, then you start with the audit with reference to your income tax or GST requirements or trust or society requirements. you have to have basic audit finished. So you need to have your SA 700, you didn't create it, and then you can have your income tax and other you didn't generate it. So there's a sequence. We need to be very clear about it. We have to be sure about it when we do it. Now, if we see a lot of these income tax assessments, we run through it. A lot of these reports are, we call it as speaking orders. When we read the reports, they say why they have concluded a specific matter in a specific way. What is the basis? What is the logic of concluding audit report in a specific way? In audit report, we never had to think this. Most of the time, people used to copy audit report of the previous years and which we have used it, or we borrow copy audit report from somebody and we use it. But that's not possible. Now they are expecting us to make a speaking report, which is clearly evident in case of key audit matters. That means they expect you to say how audit has been performed. We're going to see what is these key audit matters, where is it applicable, whether it's applicable to us or not, or what is emphasis on matter, how it is applicable to us. So I just want to stress upon that what we have been doing it in past, that very little time was spent on the audit report is not going to be possible going forward, because audit report represents your face of what you have done it. So it is expected that audit report clearly define what has been done and what are the challenges or any area which you want to highlight it. When we have made audit report, why our industry is facing a problem? Because everybody wants to have a different expectation from audit report. There are certain people who want to see future based on my audit report, based on my audit what I perform. Banks wants to see whether company can continue to repay its funds which has borrowed, or financial institution or creditors wants to make sure that its their funds are secured in the company, and the company will be able to generate money and pay them back. So they're looking at your report. They want to assess future. So there's a requirement of going concerns of future requirements. So we are expected to address that. But there are tax regulatory authorities, they want to see historical information, because the tax are calculated predominantly on the historical information. From the same report, from the same financials, what you have audited, somebody is expecting to see the past information. The business owners, shareholders who want to run, looking at your present financial information, they want to run their business. Again, it's from the same audited report what you have done it. But there are regulatory bodies like ICAI, SEBI or NAFRA. They want to see your past, present and future from your report. They are not restricting themselves. So it's a sensitive matter. One audit report, one audit is expected to satisfy all different variety of stakeholders. If any of the stakeholders' expectations are not met, we have a problem. And audit reports are defined, designed, keeping in mind all these three requirements. Our focus is sometimes not, we are focusing more on historical. Although I am talking about the proprietary level, partnership level or trust or society, our focus has to be on all these four segments, which is expected from us. Forming an opinion, I'll just start with 700, the smaller introduction of 700. It is important because 700 was brought in first April 2018. It is applicable from 1st 2018. There have been questions, what if I do audit today for financial year 2015-16, whether I should use old format or new format. There has been a beautiful guidance note, implementation guidance note provided by ICAI. It says very clearly, if you're doing audit today and you're generating UDIN today, you're doing audit for the past, for example, 15-16, it says very clearly, you are expected to follow audit report of earlier period, before the modification, before the revision has been brought in. So for 1st April 18 onwards, make sure that your new audit report has been followed. That's what is expected. And case 700 is applicable to general purpose financial audit. That means the moment you call it's an audit, it covers. But if you're trying to do a partial review of any company, just focusing on accounts receivable or audit debtors, or creditors, or focusing on certain asset side of it, then it is not. It is expected to comment on the entire financial statement. So it applies to the complete financial statement. Effective date, I've just told you. It has to be always addressed to the owners or partners or members to whomsoever we are trying to do audit. So make sure that your audit report has this. Separate UDIN I've already shared with you. We are expected to generate. And whenever we say audit, which we know it, whenever we say it's true and fair view, that means there are 4 or 5 basic assumptions. We always have it for that. That is the entire financial statement. We have given an opinion on the entire financial statement. True and fair view. True and fair view means that we have received sufficient audit evidences. The reporting frameworks have been followed. What is reporting framework? All auditing standards have been followed, materially complied with. Absolute, adequately disclosed policy. The accounting financial statements are disclosing accounting policies correctly, adequately, and they're consistent with the reporting framework. The reporting framework is nothing but your accounting standards. Management estimates are reasonable, and terminology used in the financial statement is appropriate. That terminology in the sense the wordings which are used are something which are plainly can be understood. So these are the basic assumptions, basic understanding based on which we say the financial statements are true and fair. Now, when I'm saying referring this, I just want to make sure want to bring everyone's attention. We're talking about our accounting standards. Please be aware that accounting standards are applicable no matter whether it's a proprietary firm, it's a partnership firm, it is applicable. Whether it's a tax audit or a non-tax audit, as long as you're doing audit, accounting standards are applicable. Please be aware about it. At the same time, when we make financial statement, they are expected to have policies and the notes to accounts, because that they are the explanatory. The readers of the financial statement will not come to know unless these are provided with these with the financial statement. So notes to accounts or accounting policies again are part of the financial statement, whether you do audit of a proprietary, partnership, trust, or any other entities. Make sure these are there. They are always part of the financial statements. No matter even if you have done it for some other act, but they have to be there. They have to be part of it. So I want to make it one thing clear that accounting standards cannot be avoided. No audit can be performed without accounting standards, and most of the accounting standards are mandatory. So with this, I move to the next slide. When I wanted to draft audit report for my client, I opened book and I saw there are 3 standards. I just first initially I didn't know which to follow. So I saw there's a AS 700 which talks about opinion reporting on the financial statement. Then I saw there's one more modified opinion. There's one more auditing standard 706 which talks about emphasis on matters. So there are 3 reports. So I just wanted to touch upon 3 reports and understand when we have to draft audit, which we generally spend very less time, we should know which standard we need to use it and how do we use it. That's very important. So I want to share with everyone how these have to be interpreted and how we have to take it forward. So these are structures, broad structures, which are provided in the auditing standards. These structures have a certain sequence. We cannot change this sequence. We are expected to follow this sequence in the same line, the way it has been changed. I just want to highlight it. First, if you look at this change in the audit report, it always talks about opinion first. It starts with the opinion. I'll just take my laser pointer. Yeah, it starts with the opinion. And then if you see modified, it starts with qualified opinion, adverse opinion, and EOM starts with the opinion. After opinion, it has a basis of opinion, basis of qualified opinion. What does this mean? It means the auditor is expected to start his audit report with, if there is a qualification, he has to start with his audit report with the qualification. In past, qualification used to get reported in somewhere in other matters where people had to search for it, look for it. Kahan pe audit report hai? Kahin pe italics are bold hai kya? And in case if they are able to find out with the reading of that, a lot of time, people could not interpret what is this qualification stands for. What is the basis? Why is auditor saying that this qualification is there? Nobody could understand. The institute is very clear. It says you want to qualify. There's no option. You start with your audit report with qualification. You cannot beat around the bush. You have to start with it. There's an old movie. It says good, bad, and ugly. Villain catches a hero who's sitting in the bathtub and taking bath, and he says, "I'm going to kill you. I was looking out for you to kill for long. Today I'm able to find it, and I'm going to kill you." Before he completes his sentence, hero who's sitting in the bathtub, he takes out his gun and he shoots it, and he says, "You wanted to kill me? Kill me. You should have killed me without talking it." So similarly, institute is very clear. You want to shoot? Shoot. Don't waste it. Don't waste time. So it's very clear when it talks about giving opinion. They are expecting us to give opinion. And there are key audit matters, management responsibility, and other aspects. So we're going to touch upon each of these heads and see how does it impact to us. And I wanted to take that forward. So whenever we are expected to make this report, each of these paragraphs have to have a title. We never had title to each of these paragraphs. They have made it very clear. So your first paragraph title itself says qualified opinion. We are expected to say our report. If it is a qualified, heading itself will say qualified opinion, or it has to say adverse opinion, or it has to say disclaimer opinion. Now, a lot of time, each of us, we have been using these words interchangeably. Sometimes we say qualified opinion, sometimes we say adverse opinion, sometimes we say disclaimer opinion. We need to be very careful. Institute is expecting us to differentiate between these 3 and write it. It is very important. And how to differentiate between these 3-4 three items, they have defined some kind of formula which we're going to see it, and we'll take one live examples and we'll try to see how we address this out. So whenever you guys are going to write an audit program, please make sure that it has a title, and title should be very clear. If there is a small qualification, it has to start with qualification or adverse opinion or disclaimer. We'll see what those stands for and how they differentiate. If there's a clean report, no reservation on the financial, it can start with the opinion. It did not have to say this. Now, when we say clean, qualified, adverse opinion, the moment we say it is beyond a tolerable limit, we qualified. What is the tolerable limit? How does it work? We will see that. So basically, when we say audit report is modified, it has three dimensions: qualified, adverse, and disclaimer. The three aspects which we are going to see. One important thing I wanted to share with you guys is we have been writing audit words subject to, except for. So in CA Institute's guidance note has says very clearly, subject to word does not gives you a same level of trust or same level of understanding. So they have asked members to use word except for. Make sure we are not expected to use word, and it is guidance note very clearly says it is their opinion. And before giving this opinion, they must have studied international guidelines, how the wordings are used internationally, and then we are adopting it from the international standard. Now, let's see what are these qualification, adverse, and disclaimer. What is the difference between these three? Now, they have this chart, beautiful chart is given in auditing standard. It's standard itself. It's not created by me, but it's very clearly, very beautifully defines what it means. First, I wanted to focus on material and pervasive. Pervasive means what? Something obvious which cannot be hidden. Let us, for our understanding, let's assume it material and important, just for our understanding. Now here, first column it says material and not important. Material and important are pervasive, and we have sufficient information here, and we do not have sufficient information. So these are the four combinations we are expected to use it. We'll see these qualifications with live example, and so that we know how to write a report. When we write a report, where to put what. Now I'm saying an audit issue is material, which is material enough so the reader's opinion can change if I change that figure, and it is important and it is not important, and I have received sufficient information about it. मेरे पास पूरी information है. I've read this, and it is important for me. It is not in line with accounting standards, or it's not in line with the disclosure requirements, or it's not in line with the accounting principles. Then we are expected to call it as a qualified opinion, because it is material but may not be as important as other aspects. But if I'm referring and matter is material and important, we want to see these with live example. I think that will help you understand better. We have item is material as well as it's important or pervasive. If it both are there and you have a sufficient information about it, you have to call it as an adverse opinion. But if you have information is material and it is not important, and you do not have complete information about it, you can still qualify it because you have identified it. You know how it can impact. You may not be able to sometimes quantify it because of sensitivity, or the amount is not that important. It may not hit to the entire operations, and we call it a qualified opinion. But you do not have information about an item and it is important, then you are expected to disclaim. Disclaim means I'm not able to say what it means. Let's take one example for these three and 4 items and understand. I'll just take these items. I'll just go a little ahead and then come back to you. I'm taking an example of one qualified opinion. If we have to draft one qualified opinion, it's a simple one example. Same example, we'll use it in what circumstances. Same example will become qualified, modified, and disclaimer. Now, in this example, the company is saying the company's inventories carried in the balance sheet at rupees so and so. The management has not stated the inventories at lower of cost and net realizable value, but has stated them solely at cost. So it's a lower of cost and realizable value. They have not done it. They have stated at cost, which constitute a departure from accounting standards prescribed under Section 133 of the Companies Act. In case of this is a company, if it is not a company, this is a departure of the accounting standards. We need not have to say Companies Act because we are still doing for audit for under accounting standards. then we are also expected to say how does it impact. Companies record indicate that had the management stated inventories at lower of cost and net realizable value, the amount of rupees XYZ would have been required to write in the inventories down and to their net realizable value. To what extent we would have reduced value, we are saying it. That means we have information. Agar ye net realizable value pe dalte, what would have been value? So we know this, we are putting it. Now, what it says by doing, if since by not doing this, which all places it is impacting? Accordingly, the cost of sales would have been increased by rupees XYZ, and income tax and net income and shareholders fund would have been reduced by so and so, respectively. So look at this. When we draft this, institute is saying we cannot comment and say okay, the profit would have been understated to that extent and stop it. No, it says which all places there might be one of the stakeholder, could be banker or creditor or anybody or your customer. He is trying to see what is your cost of goods sold. So they are expected to say the cost of sales, impact on the cost of sales, and the income tax which company is paying would have paid a different amount than what it has been stated, and what is the shareholders fund, how it is impacting. So when we say impact on the financial statements, we are expected to give impact from all around. Let us take same example. I have a company which is manufacturing juices. Juices are predominantly sold in May, June, July. April end or mid of April. May is the major market, June, July. So most of the stocks, since the season gets over in the month of Jan, Feb, most of the stock is procured and the production happens and heavily. And these stocks are deployed, and these juices have certain life. They cannot be kept for beyond certain time. Let's take an example. In our case, say 6 months or 4 months life. Juices fully packed material. And take this example now for this. I go back to this chart. I go back to the same example now. I'm saying 31st March, I have a stock, quite a lot stock manufactured, and I'm doing audit today, and I know the stock cost of manufacturing each per liter of certain juice was rupees 15 rupees. And whereas since because of lockdown, we could not sell it for 15 rupees. Somewhere it is sold for 10 rupees, 12 rupees, average cost is 12 and a half rupees. So it is sold below the cost. Now we know the impact because of the closing stock, which is there at the year end. Had it been done at 12 and a half rupees, what would have been impact on profit and loss? And we can very well say it. So the given example perfectly suits here. So we know how to write this example with this. Understand? Now I go to the next area. Now I'm saying this stock, I'll give you one more information. This company has a major sale in the entire year's 50% sale happens in next 3 months, because nobody drinks juice as much as in the month of April, May or June, to some extent in July, because the rainy day starts and then winter starts and nobody takes. So my 40 to 50% of my inventory gets sold only in these 3 months. Now looking at the financial information, the entire year's sale is getting impacted, and the entire year sale happens because I've manufactured enough material in the month of March which I'm going to deploy. Since I could not deploy this material beyond because of COVID, now material is material, and it is important looking at the financial. In that case, I'm going to call the same opinion as an adverse opinion. This is an example. Now I'll go further with the same example. I'm doing audit in the month of say June, and I'm the same example. I know the stock is there. I have and there's some amount of material. We know it till June it is not been sold. Some is still lying. So the unsold material still has 1 more month's life. I go and talk to the plant guy and say, "Okay, boss, ये 1 महीने में expire होने वाला है." He says, "No, sir. This has multiple uses. We're going to spend some money. We're going to rework on it, and then it can increase its life to 15 days. Fine, very fine. Now what is happening is we to that extent for this product which is there, which will be sold after the audit period, we do not have complete information about it, but we know majority portion is getting whatever is sold or unsold in April, May or June to some extent. We know that, और उसमें से जो खराब हुआ है वो भी write off किया. Only जो बचा हुआ है portion which we have to find out उसका impact क्या है. So in that case, my impact, the material, may not be as important, but it is material because it's a part of the stock. the amount is material. So we will continue to qualify it. Let's take same example. Production guy says, sir, इसको मैं अगर पैक जब खोलूंगा तब समझ में आएगा इसको ट्रीटमेंट क्या करना है. Depending that on I have to do some more treatment, I can add more flavors and certain things. So this product can become used, can be used for 1 or 2 months more. And what I have to spend on after I open that, it is only possible when I actually open a pack and I see inside what is the state of this juice. So you do not know what is the possibility. So that means there are multiple possibilities, because this stock might be completely get wasted, or might get spent money 6 rupees or 8 rupees on it to further treat it, which you don't know it is only, which you'll come to only when you open it and when you look at the stock, what treatment has to be given. So there are multiple possibilities of this stock. There are multiple options, and whichever option they adopt, it's going to have a different impact on the financial statements. So this point of time, you don't know what extent we can address it. And my stock is important. It's high value, and it's important for me because it's a major stock still unsold. If that is the case, I do not know multiple possibilities. I do not know multiple options. I do not know multiple impacts which are going to have on my balance sheets. You are expected to disclaim it. We do not express our opinion, or we are unable to express our opinion. You start with this. So this is how we try to differentiate between the qualified opinion, doer's opinion, and disclaimer opinion. These are the broader possibilities. Mind well, I just want to give you a small warning to everyone. When we put qualified opinion, वो paragraph change करते हैं, audit report print मार के दे दिया. Can we do it? No. The moment you said you are not able to, let's take an example, you're not able to get adequate information and you have disclaimed it. That means you cannot write at one place in the balance in the audit report that we have got adequate information to perform this audit. You cannot say this. You cannot say that I've got all the information to perform this audit. Those paragraphs have to be changed. There could be one more paragraph which says the internal control commensurate with size and nature of the company. They address all the requirement. It has worked throughout the year. And no, you cannot say that because some places there's a gap. So you cannot, the moment you have a small qualification in your audit report, mind well, you cannot take an audit report, draw audit report without reading from top to bottom. Because there could be a line which will say, yes, you got everything. Everything is in line. Or it has followed accounting standard. You are not following accounting standards. You are not following certain principles. You have to change those. So it is going to be a speaking report. Why you're making these changes? It cannot be a generalized report of copy paste, which we have been doing it in past, which we have done it in earlier times. Now, let's go back to my example. Qualified report, yes. C Institute, I gave you initially example, a lot of qualifications, a lot of auditors resigned. I'm not talking about the public listed company. NCA has information about non-listed companies as well. They have very detailed. Why, whenever you resign nowadays, why they are asking detailed reasons of the audit? We are not expected to give comments like due to prior occupancy of my thing, due to health reasons, or due to certain reasons which are unrealistic, which we cannot get, which we used to do it whenever we used to give reasons for resignation. So if there is a casual vacancy on account, other than on account of death of an auditor, each new auditor taking this audit has to address these reasons, how he is able to cope up with this. This is one of the requirements of CARO slide, which is going to come at the end. I've covered this now. So whenever there's a qualification, there's a resignation, we have to address this out. Now, what it says, if you're not able to get information and the amount is extremely important and your qualification would be inadequate to communicate gravity of situation. मैं जो बोलने वाला हूँ शायद वो नहीं पहुँचने वाला है आपका. मुझे, I still feel there is a bigger depth in it. C Institute has given us guidance. You can withdraw. You are supposed to withdraw audit. So it says when to withdraw from your audit. Now there are certain circumstances it is not possible for us to withdraw audit because the stage is set. AGM is published. Dates are published. Everybody is expected. Reports are like almost discussed. Now you still have to sign it. You are not in a state to resign. Yes, there could be such situation. C Institute has envisaged these kind of situations also. It says it's very clearly, if withdrawal is not possible or practicable before the issue of an auditor's report, disclaim the opinion of the financial. The disclaimer is the last option which we are expected to use. Beyond disclaimer, if you're going, you're expected to reverse. तो मेरा सबसे बड़ा हथियार जो ऑडिटर के पास है, that is a disclaimer. Beyond disclaimer, if he has to write an audit report, he is expected to resign. Where is it said? It says in para 13 of SS 705. It says very clearly आपको कैसे करना है. There are certain guidelines how you should withdraw. Whenever you withdraw, the new auditor has to address these problems. Now, I want to give an example. There used to be, if there is any big audit resigned by any of the big firm, it is always, the company always used to hire next big firm. Big 3, big 4, we call it of India. They always used to hire audits in among themselves. Now, all these audits which are resigned in last couple of years, which are almost 300 plus to close to 400 audits, none of these audits have been rotated to big firms. That means what? They come to the smaller firms like us, small and medium-sized practitioners. And small and medium-sized practitioners are able to do audit, which the bigger firms could not do it. So is it not a sensitive information? Is it not very sensitive? Are we so thick-skinned that we do not feel it's a sensitivity? Now, what auditing guidelines Caro says that we are expected to make comments. I opened some comments of some reports of a big firm, a big company which is audited by some other firm, which is not a well-known firm like us. Then I saw the report, the responses to the concerns raised by the auditor. If you look at the most of these resignations, primarily these resignation on account of two things: non-availability of information, not satisfactory of information, and third is lack of cooperation for sharing of information. Basically, everywhere they have spoken about non-availability of information. And mind well, India's some topmost companies, you have seen these kind of resignations for these kind of issues. Why auditors has become suddenly so sensitive? Because there is a change in audit report. You're going to see what those changes are. You're expected to comment on going concern. Can you do it when you do not have information? Can you risk your practice for one client? That's what the question is. I can handle one proprietary firm, but if it is that matter is likely to go to CA Institute because that guy did not pay to the bank because of his genuine COVID problems, or some creditor files it, can we handle it? Can my audit report says this? Is my audit report properly classifying whether there's that I have given enough warning in my emphasis on warning, I have qualified, I've already said it in audit report, then I can come out of it. If my audit report is not saying this, then I have a problem. This is what I wanted to share with everyone. Drafting audit report for smaller entities is as important as when you draft audit report for larger entities. Please spend more time on the audit report 700 or 705, 6 as much as you spend on 3 CD, because you feel 3 CDs, somebody is going to ask you a question from the department. No, it's a face list now. Not only that, here also somebody is going to ask. The person who's going to ask questions for the 705 is more sensitive. Either it can be an AFRA or it can be CA Institute, or there can be an auditing accounting standard board, review board. Be careful about it. I just wanted to share this with you before. Now, when we're referring this, we said material and pervasive. What is this materiality? We all know materiality. We have been reading it. Materiality changes. Materiality, it's a statement can arise due to fraud. Now, there's a definition. It says SC 320 deals with materiality and performing audit. I just want to share one before I go to this. जब हमने CA Institute का exam दिया ना, ethical standard, we used to read it, 16 marks, we used to get it, and then we used to read it and we used to write that, and we never thought it's that important. I challenge everyone, read same auditing ethical standards today after when you're in practice. Each line when you'll read, it will give you shivering. अभी आपको समझ में आ गया कितना dangerous चीज है जो हम लोग कर रहे हैं. Because वो time में हमको depth नहीं थी. My boss used to sign audit report. I never had to take that honors. I was only focusing on certain aspects. But if you read same thing today, you know its impact is much different. Not only that, these ethical standards have changed. Same way, auditing standards have never been read after people who passed CA. Whenever I speak to CAs, most of them say कि ये तो हमारा routine matter है, let's कुछ और चीज का बात करते हैं. आप auditing standards को निकाल के आज के दिन में पढ़िए, because the businesses have changed, the auditing standards have changed. You'll realize the impact is very different. Can we define a materiality today? Because the materiality is going to change. Now, if you go to fight with CA Institute, say, sorry, material nahi tha. What is a materiality? How do you define it? Are we aware? But CA Institute has taken proactive steps. They have given auditing standard much before. They say कि boss हमने आपको guidelines दिया, you are expected to read this. ऐसा कहीं पे हुआ है कि हमारा guidelines नहीं है? Okay, let's sit and understand your logic. Otherwise, you read that first. So materiality is again important point. Materiality says mismanagement can arise due to fraud or error and are considered material if individually or in aggregate they could expected to influence the economic decision of the user taken on the basis of these financial statements. Mind well, एक चीज बताना चाहता हूं. It says aggregate, individually or in aggregate. What does this aggregate means? आपके छोटे 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 ऑडिट रिपोर्ट में जो मिस्टेक मिलते हैं ना ऑडिट में आपको, उस सभी को आपको डाल के टोटल मार के देखना है. And then you have to say whether it can impact your the profitability and whether it is material or not. We have to keep track of each query which we have given up. Add those out. So you have to have a tolerable limit. वो लिमिट के ऊपर जाएगा तो आपको क्वालिफाई करना है. ये लिखा हुआ है 320 में. And we are expected to follow when we do qualification of a normal audit. So when you guys do smaller audit, property partnership, we are expected to keep track of each query which has not been resolved by the client and whether it has some impact. The impact need not always be on the profitability. Impact can be on the disclosure, inappropriate disclosure. एक example देता हूँ. Debtors with credit balance or creditors with debit balance. Let's take that. Creditors with debit balance मतलब क्या? Supplier को मैंने advance दिया है, वो मैं उसी में net करके दिखा रहा हूँ. That is some small proprietor has done it. Because of this, what happened? His creditors, his liability got understated, isn't it? So his liability got understated. That guy could fit into the banking requirement of loan and is able to draw loan. This is called misstatement of financial statement, financial information. The word misstatement means what you are expected to do and you are not done it. So you are not expected to merge this net of these figures. Here, when you say creditors with debit balance, advances to the supplier has to be shown separately. It cannot be part of your creditors. This is a smaller example how it can influence your economic decisions. These are examples. Now, what we are expected to do materiality, we are expected to collect these figures, unsolved, aggregated. A lot of time there are certain guidelines is given at account level and balance sheet level. A lot of time it says beyond a certain level of expenses, you show it separately in P&L account. There are certain item of balance sheet beyond 1 year, less than 1 year, current, non-current mein dikhaiye. That means they are trying to show you what is the material for next year, working capital, how you define. There are certain relationships. But being an auditor, we are expected to define what is materiality, and this is materiality has to be in form of an amount in our mind. It cannot be vague, because when I read NAFRA's, it says auditor has not defined materiality figure, or the way of defining materiality is vague. You cannot say, sir, मैंने तो बोला था economic decision of the user change होगा, मुझे क्या मालूम कौन decision user है. No, we are expected to say that what is materiality. So when you do audit, there are 3 aspects. Keep in mind, there's a tolerable error for level for you. The moment you have accumulated unsolved queries reach to that level, they go beyond that level, then you have to qualify it. So when they reach to your, so we call it material figure. So there are a few examples which I want to share with you. What is materiality? This is primarily because I wanted to touch upon these 2 aspects. I've given you example of adverse opinion and disclaimer opinion. I didn't make that slide because same slide could be used. Now, when I was going here, there's a next head, base opinion and basis of opinion. Basis of opinion, you're saying it. What is the basis? Auditing standard are not followed or whatever, or misstatement in the financial statement. You want to say those bases here, and then you come to the next basis of qualification opinion or basis of opinion. After that, key audit matter. I'm not going to discuss now, but I'll definitely tell you the moment I go down. Key audit matter is a new audit subject has come in. It is mandatory for the listed company. It is not mandatory for the non-listed company. That does not mean हमको नहीं करना है, हमको कर भी सकते हैं. क्या है चीज? We'll discuss that when I go down. I'll take the next item of management responsibility for standalone financial statement. The word standalone is used by institute. You can always change it in case if there are no subsidiaries, there are no other entities which we consolidate. If it is not, they've given it in the guidance note. Yes, you can take that out. That's fine. That's what they're saying it. Management report. Now, management says always we know in companies you read audit report. Management, it is management responsibility to draw financial statement. Likha hota. When I go to the Companies Act, there's a section which says okay 134.5. It says it's written what is the management responsibility in the Companies Act. It is defined. But when you do audit of a proprietorship or a partnership, is management responsibility defined anyway? No. कल कुछ हो गया तो वो तो बोलेगा सर ये तो आपका काम था, मैंने तो आपको ऑडिट दिया था, इसका मतलब आपको ही बैलेंस शीट बनाना है, आप ही को रिटर्न भरना है. मेरे पास कौन स्टाफ है? मेरे पास तो पार्ट टाइम अकाउंटेंट है. मैंने कहाँ बोला मेरे ये सब मैं करने वाला हूँ. Just by saying audit, it does not interpret that we have only auditing responsibilities and we have not taken those responsibilities unless it is said somewhere. How will you say it when you're doing audit for a proprietorship, a partnership, man? That's going to be a risky matter. Companies Act में लिखा है, मैंने कहीं भी नहीं लिखा तो भी Companies Act में तो बोला था, board You know your responsibility. Directors, it's already their responsibility. I may not have to say it. But proprietorship and partnership, this is going to be a challenge. Then what are we expected to do is, either if you're making an engagement letter, अगर आप बना रहे हो तो उसमें उसके responsibility लिख के sign off कर लो. But there are firms, they do not make engagement letters. Make sure that you take this in management representation letter. This is very important for you to put it in management representation letter in case if tomorrow he puts an allegiance. मुझे मालूम नहीं सर ये figures मेरे इसमें कहाँ से आई है, मैंने तो बोला नहीं था. मैंने बोला है, बताइए मैंने कब बोला था मेरे फाइनेंशियल. हाँ मैंने नीचे साइन किया था, मुझे पूरा चीज समझता नहीं. Okay, you can fight it, you can come out of it, but it brings a lot of stress on us. We cannot take such chances. So put down what is their responsibility and what is our responsibility in management representation letter, and do it when you're doing audit of smaller entities. Please take care of this. Next matter, this management responsibility standard, which is the para which is provided by institute, also talks about going concern. Do not delete this when you make your audit report. It is a small. सर ये छोटा कंपनी है, प्रॉपर्टी मैनेजमेंट, इसको गोइंग कंसर्न क्या क्या करना है, इसका तो कंपनी चल रहा है, ये तो बेस नहीं. We are not supposed to remove this. You are still expected to write the management has whether they have done proper estimations or not. How does the proprietor or partner says that he'll continue to be a going concern, he'll continue to repay all the liabilities which are going to arise in 1 year's time. ये कहाँ बोलना है? अगर कारो एप्लीकेबल है तो कारो में बोला है, आपको लिखना है. तो कारो का और एक स्लाइड में जो चेंजेस है उसमें ये है, if they whether company can repay all its liabilities in which are going to accrue in next 1 year's time through its normal course of operation with the assets what is are shown in the balance sheet. ये पैराग्राफ पहले कभी नहीं था कारो में, अभी आया है. So what institute says, going concern, nobody has a right to remove this, and these kind of items are what are triggering auditor's resignation, because now auditor knows to what extent he can tolerate, to what extent he cannot tolerate, and what extent he cannot tolerate is also written by institute. Now we know where to say no, where we can put our foot down. This is an example. There's a question number 19 which is given in the guidance note. Even if there is no material uncertainty for going person, this para is required to be included. I just wanted to give reference so you can always say, sir, ये कहाँ लिखा है? आप बोल रहे हो? नहीं, हर चीज लिखा हुआ है. That's what I'm trying to stress about. Now, जैसे हमने we saw here management's responsibility, we also have to see auditors. Sir, Ujjwal sir, bore mat kijiye, auditor's responsibility, we know what it is. My dear friends, we need to read it once in a while before we do this. That's important because sometimes we forget our responsibilities in our routine stress of life. We forget in the changes which are coming in my GST and other acts and TCS and other things coming. We are forgetting our responsibility. It is necessary to touch upon this subject. Then we'll see how does it impact us. We'll discuss this too. It may be the auditor's responsibility may be given in form of an annexure. It says because it is a little lengthy. So what it says, boss, आपको अगर annexure जैसा देना है, आपको लगता है audit का report में काफी बड़ा नहीं करना है, आप कर सकते हो. Fine. What C Institute says, as a part of an audit, in accordance with standard of audit, when we do it, we need to exercise our professional judgment and maintain professional skepticism throughout the audit. These words are very beautifully defined. इसका wording का मतलब बहुत बड़ी depth. I'll give you an example. What is professional judgment? Professional judgment does not mean a personal judgment. Means if I do some judgment and Santosh Sharma does some judgment, or Sanjay Bhujbal does some judgment, or Shrikant Lime does some judgment, these judgments are going to be, the end result should be close to each of us. It can change a little bit, but it cannot vary drastically. If it varies drastically, that means there's a personal judgment. Need to be carried. What is personal, professional? We have been given all rules, regulations, standards. We need to see from those aspects and determine this. Now, what is professional skepticism? What is skepticism? Skepticism means doubting something, not believing. This means skepticism. So you have to exercise professional skepticism. You're not doubting on somebody and it's going to start an investigation. You're going to doubt with reference to your professional requirement, whether these professional requirements have been followed or not. So I just wanted everyone to re-understand meaning of these words when we draft our audit report. Please, it is important. Then auditor's assertions, we have certain assertions. We say that we have identified and assess the risk of material misstatement. First of all, we need to know what is material and misstatement in the company. Misstatement ka example maine diya, creditors with debit balance. So these misstatements should not come. We have identified risk because of such things. We need to, and we have addressed this. The risk is higher in case if the fraud is involved as compared to the error. मतलब अगर fraud होगा तो और भी बड़ा होगा, अगर error गलती से होगा तो छोटा होगा. ये हमको मालूम है. This is what we are seeing. And we are seeing internal control system understanding and design audit approach in circumstances. That means we have understood internal control systems of a company. Accordingly, I have decided which area to audit more, which audit area to audit less. छोटे client में कैसे करना is a challenge. We have to have some logical way of doing our audit sampling or audit what we have done it, and this might be important for one of unfortunate chartered accountant if he has to face a disciplinary committee. अगर कोई client pay नहीं कर पाता है कोई loan, then we have to get into these kind of, because banks are going to protect themselves. They want to say कि ये financial पे मैंने loan दिया, भाई देख लो क्या करना है. There could be some challenge. It is also saying that evaluation of appropriate accounting policies and reasonableness of accounting estimation. That means हमने accounting policy के हिसाब से है कि नहीं वो भी देखा है. Lot of time we do audits, mind well, my dear friends. Auditing standard 15 like retirement gratuity provisions are never done. Inventories are they just sometimes calculated based on the year-end count. So there are so many requirements or accounting standard. Please mind well, they are important for us. And then it says conclude on the going concern whether the material uncertainty exists relating to the events or conditions that may cast significant doubt on company's ability to continue as a going concern. Again and again, you see all our audit report. They're stressing again and again going concern again and again. And then you going to see these going concern issues even in Caro also. And the next critical issue they're stressing again and again is diversion of funds. You'll see those. So here they're saying auditor ने भी बोला है कि going concern है, management ने भी बोला है going concern. Management का basis क्या है? Management being a company who's running company can always give a good example. उसको आप मालूम है कैसे बात करना है खुद के company के बारे में, market के बारे में. And auditors say that we need to document this. This is very important. Overall presentation structure and content of financial statement, including disclosure, so that they represent fair presentation. So we have been given certain norms of presentation. We have followed this. So these are the auditors' assertion. I just wanted to touch upon this, re-understand. I know हमने पढ़ा था, exam में भी दिया है, pass भी हुए, but ये आज के दिन में when we do audit and when we see this, how much we can do it qualified, we need to understand that. And then we are also expected to say that we are in accordance with the code of ethics issued by Institute of Chartered Accountants of India. What is code of ethics saying about independence? Audit का मतलब क्या था? We are not connected to somebody and I'm giving my fair opinion about true and fair opinion. This was a meaning understood throughout the life of whatever we have been doing it. But now why there is a need that auditor has to say that by I'm not connected with the company. That means there have been certain misunderstanding about the auditor and auditor that even if he has a breach, he's done the audit. But disclosing his involvement with the company, he thought he can get away with it. What does ethical standard say? It says having financial relationship with the client, not allowed. It should not be related to you, not allowed. You should not have accepted gift beyond certain levels. These are not allowed. So they have defined very clearly what are important things, which says there's no independence. There's a conflict of interest. So conflict of interest is what is coming out. So we are seeing this. So auditor's responsibilities, I just want to cover it. Just wanted to remind it. Now I wanted to go back to this audit report. So ये management responsibility था, but इधर एक audit report में key audit matter है. ये क्या है हमको समझना है. Key audit matter is not optional. I can see. Key audit matter. Emphasis on matter. I'm sorry. I'm really sorry. Key audit matter and emphasis on matter. दो नए चीज हमारे को अभी आ गए हैं audit में जो हमको समझना है. Emphasis on matter is defined in 706. We need to understand what is this, and then we go. Emphasis on matters are so important. First of all, emphasis on matter are properly disclosed in the financial account. They do not mean qualification. इसका मतलब qualification नहीं है. इसका मतलब ये है कि जो भी रीडर पढ़ोगे, भाई ये पैराग्राफ को समझ के पढ़ना. इसका मतलब क्या है? The client has already, what you are saying is has already treated properly in the books of accounts, but you still want the auditor user to read it so that he understands these financial statements much better. We'll see some examples what kind of things can go in this. So EOM is not a qualification. Emphasis on matter is not a qualification. And giving EOM in place of qualification is completely prohibited. मतलब आप बोल रहे कुछ qualification को EOM में घुसा के निकाल दो, emphasis on matter में डाल के निकालो, नहीं कर सकते. EOM is not qualification. You're trying to highlight something is there is an emphasis on certain matters. That's where it stops. Key audit matter, I just want to touch upon. Key audit matter का मतलब क्या है? मुझे audit मैंने कैसे किया, मुझे मालूम नहीं audit कैसे करना है. एक example देता हूँ. हम लोग bank audit कर रहे थे. Especially audit was happening in the month of May, and we could not visit Goa, and we were excited because Goa branch was great. To all partners, we were ready with our baggage, but then we realized कि बहुत जा ही नहीं सकते. लॉकडाउन है, 14 days का लॉकडाउन, उधर जाएगा गोवा में हम लोग कुछ कर नहीं पाएंगे, कोई होने नहीं वाला है. So we were very disappointed. So, and we had another branch, BKC branch. We could not visit BKC. So we sat in the Vashi branch of that bank and we did audit. Now, when we said in audit, how did we do audit? We did audit. We obtained all information in form of in electronic format. So how did we audit? It's a different way of doing audit. We could not visit client's location. We could not do with their physical verifications of cash. If it is a company, I would have said I did not do physical verification of inventory. But how did I do it? Since I could not do this, I performed different ways. These are the different ways I adopted and I did it. I can give you an example. मैंने एक company का physical verification कर नहीं पाया COVID के कारण. So what I did, whenever the company opened, they did that day physical verification. I rolled back and then I checked it. That is one way. और last उनका verification Feb में हुआ था. उसके बाद logically plus minus जो आया गया material मैंने लेके वो उसके साथ match होता है क्या नहीं मैंने देखा. These are secondary. So whenever you do key audit matter, you are expected to say this. आपको याद है हम लोग मैथमेटिक्स का पेपर सॉल्व करते थे उसमें अगर मैंने विदाउट स्टेप्स डाल के सीधा आंसर लिख दिया मेरा आंसर बराबर भी होता था तो 10 में से मुझे को 4 मार्क मिलते थे. But if I write down the steps, logic followed, I used to get 6 marks more. Those marks used to be more than my closing answer. There's a possibility I might did some guesswork and I can arrive my answer. No, it was not possible. So there were marks for my steps. So key audit matter gives marks. It is a similar. You have to say how did we do audit. This is not mandatory in case of smaller firms. It is mandatory in case of stat audit. But C Institute says boss आपको अगर कहीं बोलना है कि मैंने audit कैसे किया ये बहुत problem था मेरे लिए आप इधर करो. अभी आप बोलोगे सर ये फिर कोविड का हम लोग कहाँ लेके अभी आप मेरा एग्जांपल ले रहे हैं मैंने की ऑडिट मैटर डाला था बैंक की अभी हम लोग कहाँ लेके सर हम लोग मैं तो प्रोप्राइटरी का कर रहा हूँ ठीक है की ऑडिट मैटर नहीं करना है एम्फेसिस ऑन मैटर में लिखिए उधर पहला क्लाइंट को बोलने दीजिए उन्होंने क्या व्हाट डिड दे डू व्हेन दे ओपन देयर ऑपरेशंस पोस्ट लॉकडाउन हाउ डिड दे मैनेज देयर ऑपरेशंस ड्यूरिंग कोविड लेट देम से दैट and then you put in EOM this is how they did and this is how we did perform audit and then we can do it. They have given beautiful wording. Unfortunately I'm not able to give that because it's getting it's hiding that in my slide. It's there part of the note. I wanted to share that. That's fine. But EOM you have to use it. अभी समझिए C Institute में अगर ये मैटर जाता है और C Institute में बोलते सर कोविड था हमने जा नहीं पाए सर आपको मालूम है उसका अकाउंटेंट था इसलिए हम लोग जा नहीं पाए. There are no exemption given to CAs when there is a COVID. Let me make it very clear. COVID आने से हमारा ऑडिटिंग में कोई exemptions आए नहीं हैं. What we are supposed to do instead of A alternative, now we are also have to try A and also have to try B. For example, datas में मैं अगर उसको balance confirmation भेज नहीं पाया ठीक है. Subsequent balance receipts payments मैंने देखे क्या? Did I verify the past trends of payments? How this client is he regular in paying? Is his balance going up on regular sales or he's able to address it? Is he paying bill on bill basis? These kind of analysis I have to do it and then draw conclusions. But if you say tomorrow, sir, COVID tha maine nahi kiya, will not work. And COVID has generally impacted your inventories, your debtors, creditors, places where you had to visit audit and do it audit. There have been challenges. So if you have taken documents in electronic format, you have to say I've taken it in electronic format so that beyond that, if something goes wrong, you don't know. So today you are saying tax paid challan sir mere ko electronic format mein diya tha because I could not visit it. You said it somewhere. So you're okay. But if you're not able to see and if it turns out to be something nahi sir wo diya tha mujhe maine dekha tha uta mein it will not work. So I just wanted to stress upon this. Circumstances when it is necessary. Uncertainties relating to the future outcome of litigations. Company का एक litigation चल रहा है जिसको contingent liability में दिखाया हुआ और उसके possibilities 10 हैं जिसका company पे financial का impact हो सकता है. You going to say that. Significant post balance sheet event. Post balance sheet event is the date when I'm signing a balance sheet. If any till that date, if there's anything has happened, I have to do it. Now, what is happening, guys? Everybody, we are going to sign audits after a few, maybe this month or next month. What is the impact of this post balance sheet event from April till date? We are expected to see that and have an impact on my balance sheet. एक एग्जांपल बताता हूँ. रॉ मटेरियल पड़ा है मेरे बुक्स में, वो रॉ मटेरियल को मैंने अप्रैल में प्रोडक्शन बनाया बिकॉज द रॉ मटेरियल वाज गेटिंग एक्सपायर्ड इफ आई डोंट यूज इट एंड मैंने बना के उसको बेचा अप्रैल मई जून में एंड दैट आई सोल्ड इट इन लॉस. दैट मींस दिस रॉ मटेरियल व्हिच इज lying on 31st March is going to give me losses in future. Okay, it is going to give me losses in future. That means I'm expected to provide that raw material today because I can't say raw material lower of cost and realizable value. I'm not going to sell raw material. Raw materials are created within the companies also. So these are post balance sheet events I'm supposed to see. There are certain companies adopt accounting standard much before they're coming. You're supposed to say that. Okay, there are certain frameworks which are, for example, आपको आपने audit किया है जहाँ पे trust का audit किया जहाँ पे बोला है assets can be disclosed as WDV, whereas your auditing standard says it has to be shown on the gross book value and the accumulated depreciation. There is a change. You can very well say yes, although accounting standard says this, but its audit has been done under Trust Act, where its requirement to show this is different, and I followed that. This has to come in EOM. It's been given as part of. So I've just discussed COVID note and part of it. Other matter paragraph. These are the other matter paragraph. आपको याद है audit report का मतलब ये होता था. ये सब last में आ रहा है. When you see this audit report, friends, जो हम लोग audit report मानते थे ना आज तक, वो इधर आ रहा है. It used to be always before. It is coming last. Now, what are those? What other matters which we all know? Okay, whether figures are tallying with the books of accounts or not. They are with the financials are in agreement with the books of accounts or not, whether accounting law, whether books, proper books of accounts as required by the law have been kept by the company complies with accounting standard. ये वो पहले भी बोलता था. Basis of preparation of representation on directors disqualification. We have the standard paragraph. The directors have given us representation that none of the directors are disqualified. You know when directors get disqualified? When they have not filed their ROC returns for long, they get disqualified. So these kind of standards we have it, a standard paragraph we have it. IFCs, when it is applicable, I can give those separately. But what is important here is that if it is applicable, we have to say why IFC is applicable. And company has disclosed impact of all pending litigations. If there are any litigations, uska impact, we also have to give reference to the notes to accounts. The company has made provision as required under the applicable laws or accounting standards or for material foreseeable losses, मतलब future में होने वाले losses जो मैंने raw material का example दिया उसके लिए है. There have been no delay in transferring amounts to the investor education fund. If client has or shareholder has not taken a dividend for 7 years, then we can transfer to investor education fund. This is primarily applicable to the company. But ये जो ऊपर के clauses थे, they used to be part of our main audit report, but now they have been kept at the end. Significance of date and signature in the audit report. Date एक काफी important है अपने लिए because date has to be audit report date has to be after the audit is signed by the directors or signed by the audit report the owner or a partner. So till the date you don't sign your audit report, till the date anything has happened, you are supposed to address it in audit report. I'll give you an example. मेरे पास एक क्लाइंट आता है, सर मेरा कंपनी डिस्क्वालीफाई हो चुका है, डायरेक्टर्स आर डिस्क्वालीफाइड बिकॉज हमने रिटर्न नहीं फाइल किया था आरओसी का. क्यों नहीं किया था? सर हमारा ऑडिट नहीं हुआ था. आप ऑडिट करोगे क्या? करूंगा, बट आज के दिन पे होगा, बैकडेट नहीं हमारे पास होता नहीं. ठीक है, वेरी गुड. सर कब से करोगे? सर 2015 से करना है ऑडिट. करूंगा, मेरा क्या प्रॉब्लम, मेरे को डॉक्यूमेंट्स दे दो, मैं ऑडिट करूंगा. So what happens? I'm signing all these audit reports today. I'm generating unions today. So if you find in 2015-16 there's one expenses appearing in the accounts, in 17-18 or 18-19 that same expense being not paid has been returned back. This liability has been returned back. So you're signing this balance sheet today. You know this expense which was booked in 15-16 cannot be booked because subsequently this expense has been returned back. So this is what it means. So when you sign audit report, you have to be very careful because the audit report, till the date you sign audit report, it takes care of all those subjects. So this is what I wanted to indicate. It should never be signed and before the board is board of directors or the owners sign it. Date is also important on the audit report. When I say date has to be always again subsequent to the period of audit, and it has to be a period you have to keep in mind. If it is a Companies Act, when I can sign it, the date has to be in line with that requirement, and we need to do it. Now, I just want to take one or two more thing about signature as well. When we sign audit report, it is not necessary I'm signing audit of a Mumbai-based company, and today I'm in Goa or say I'm in Ahmedabad. I can still sign it. What guideline says? You need not have to be in Mumbai to sign audit report of Mumbai. You can be any part of India, you can sign it. Say that where you are, say that place. So a lot of time we used to see, ये दिन में बॉम्बे में था क्या, देख मुझे audit report sign करना है. No, there's no need to do that. Okay. So it is important that that the place is not important as when we sign it. We have to give the reference of place and we do it. When you sign it, make sure that you're signing it in firm's capacity or individual capacity. Be sensitive to that. If it is a firm's capacity, make sure that firm's registration number is written. Sometimes people start with the letter of the firm and it doesn't say it's firm's capacity. No matter whether you sign audit report in individual capacity or firm's capacity, the responsibility lies with an auditor who's signing it. It is firm is secondary. Primary responsibility lies with the member of the institute. That's very clear. Okay. So when you sign audit, tax audit, I've already told you tax audit, GST audits are done after you've done audit. So you have to have a statutory audit signed first, and then those should be signed. Place is not mandatory. Circumstances in which management representation letter cannot help. हमको मालूम है बार-बार हम लोग MRL लेते हैं. I want to share one big example of India. One large corporate, there was some issue with the audit. Auditor asked, did not agree with management explanation. Management gave them a representation letter. Based on the representation letter, auditor raised some more queries. Again, management gave another representation explaining to the first representation. And there were again disagreement with the management. So management gave the final representation, third representation to the auditor. And the matter was concluded. And same matter went against the auditor, and auditor is in trouble. Yeah, what I'm sharing is a true story of auditor. So no matter how much representation you take, it is not going to save you. What is important is what you have it in the audit representation, how crisp it is and how effective it is. You'll see some of the prime characteristics what we need to address. We need to sign an MRL only if there's a need of significant professional judgment in drawing conclusion, which is used for opinion. Significant professional judgment मतलब ये बहुत important है इसमें. प्रोफेशनल जजमेंट के लिए काफी इंफॉर्मेशन लगती है, उसमें से कुछ इंफॉर्मेशन मुझे मालूम नहीं, इसलिए मैं उसमें लेने की कोशिश समझने की कोशिश कर रहा हूं. वी हैव टू यूज इट फॉर मटेरियल आइटम्स इन एग्रीगेट. अगर मेरे सब छोटे छोटे आइटम भी मटेरियल होने वाले हैं सब मिला के, यू आर एक्सपेक्टेड टू टेक इट इन द रिप्रेजेंटेशन लेटर टू टेक मैनेजमेंट स्टैंड. Management assumptions, for example, valuation of stock, going concern, capacity utilization, etc. Management can have different examples. हम लोग capacity utilization, हम लोग बोल रहे हैं कंपनी की capacity utilization 90% है. ओके 90% है. ये 90% आपने कैसा बोला? हमने ये स्टडी किया था हमारा कैपेसिटी, कब किया था मालूम. तो we need to have details for that. So there are certain things we need to rely on technical reports. Wherever we rely on technical report, we say that in our audit report. But there are certain understanding about the businesses which we are supposed to use it here. So we use these kind of judgment where there are management, what management has assumed for certain thing, why they are saying going concern, why they are assuming going concern. They are expected to write why I feel going concern, I'm going to write this. That is how it has to come in. Entity's ability to pursue specific course of action. For example, management has a different possible option. Management के against एक tax की demand आई है, there is a possibility he can go to विवाद से विश्वाद तक, he can file normal appeal, he can pay it off. So he has a different option. As today there's a demand. How do I address it? Can I show it in contingent liability? What management wants to do it? Do they want to pay it? No. Yes, we don't know what they want to do it. So what they want to do it, management has to say it through management representation letter. This is another example which can help. It should be generic. It should not be generic. Means it should not be general copy paste. We have verified all stock balances are correct. No, you have to be very specific. Unless if you have verified stock balances, if your audit report is saying that हमने verify किया है, then you cannot say that. Management is also saying it. You put certain things in the representation letter which are more crispy, which should represent with the figures and facts. It should not be general representation letter. That is where it will help you. Otherwise, it will not. Now, circumstances where it cannot help. There are evidences available that representations of management cannot be implemented. Possibly in management बोलते नहीं सर मैं पैसा लेके आऊँगा, company will come out of the problem. Whether it is possible, looking at his profile, credit profile, can he do it? No, man. We don't know. We need to confirm that. It may not help us. Based on the circumstantial evidences, it indicates that management is habitual of not following it. Management बोल रहा है लिख के कि सर ये सब चीज हम लोग comply करेंगे, ये सब दिखाया जाएगा पेपर आपको, and repeatedly they have done these breaches in past. You cannot issue management representation, take a representation letter for these habitual mistakes which are demonstrated in past. Now, management representation is signed by one of the directors or one of the partners. Other guy says, oh boss, मेरे को क्या मालूम? There's a dispute between the partners, directors, and then they take up this matter with institute. Boss, dispute है, हमको नहीं मालूम. हमने थोड़ी बोला था ये सब चीज. मेरा दूसरा partner ने बोला है. तो इसमें problem में कौन आएगा? Auditor. So what auditor is supposed to do it? He has to take signature of both the partners and both the directors. If possible, these MRLs should route it through the board meeting where they approve. It's not mandatory requirement for the board meeting to approve this, but somewhere board has to consent it what they're saying it, because whatever is written in the representation letter is said by the board. If there is a board in the company, I'm expecting them to say it in one of the board meetings that they have consented to the representation what they're giving it. If it is in partners, make sure both the partners do it, sign it. Both the directors, if they are a director, both the directors sign it. Same way, if it is a financial statement, you should never accept a financial statement if it is signed by one partner. If there are 2 or 3 partners, make all 3 partners sign it. There can be possibilities of dispute in future. They can disagree in future. For their personal interest, we will be in trouble. But if there are 6, 7, 8 partners, not everybody can sign it. Take a representation letter, ask everyone to sign it off. Do not compromise on this. This is very dangerous. Again, when management representation are letter, it is written as if to protect auditor and also not to qualify. No, we cannot have a word ambiguity drafted in MRL. We need to be very careful when we do this. So wording has to be crisp and it should say what you want to say it.